Welcome to S&P's European Loan Market Video Overview, detailing leveraged finance trends and activity during April 2012. I'm Suchit Gupta, a member of S&P Capital IQ's Leverage Commentary and Data Team, a unit of S&P that is not affiliated with S&P Ratings. For the next few minutes, I'll walk you through a review of recent loan and high-yield bond market trends in Europe before winding up with themes to watch for in May and early June 2012. Before we start, please know you can follow LCD on Twitter, Facebook, and can join the more than 7,000 contacts in LCD's Leveraged Loan Group on LinkedIn. We're pleased to announce the launch of LeveragedLoan.com, a free website promoting the asset class. On it, you'll find recent market stats, news and analysis, leveraged finance job postings, and an online primer detailing the key terms of the leveraged finance process. The links to our new website and to follow LCD's social channels are in the info section on our YouTube channel. You can also download the slides for this video at slideshare.net. The European leveraged finance market took two steps back as the sovereign debt crisis returned to center stage in April. European primary leveraged finance activity was disappointing in its lack of new transactions, with the high-yield bond and leveraged loan markets generating 1.4 billion euros of new volume each. The secondary loan market finished the month down 14 bips to 95.29. High-yield bonds finished the month in the secondary down 164 bips at 96.57. Even with the secondary markets down, the S&P European Leveraged Loan Index, the LE, returned a positive 0.24% ex-currency for the month of April. The primary markets for both loans and bonds is muted. Default rates, however, came down during the month, but are still expected to tick up during the rest of the year. Focusing on the secondary loan market, this chart details the average price of LCD's European Loan Flow Name Composite, a measure of the 12 largest, most liquid loans consisting of 10 issuers since 2002. Given that the sovereign debt crisis reared its ugly head in April, secondary loan prices fell 14 bips to finish the month at 95.29. This next chart details the average price of LCD's European High Yield Flow Name Composite, a measure of the 12 most liquid high-yield issues since the beginning of the year 2010. Again, the secondary market for high-yield bonds fell 164 bips to finish the month at 96.57 on the back of the sovereign debt crisis. This chart details the monthly return of the LE, a broad measure of European loan market returns that LCD calculates. All returns are ex-currency unless otherwise stated. The European loan market posted a positive return of 0.24% for April, down from 0.99% in March. The total LE return for the first 4 months 2012 is a positive 4.62% versus a positive 4.78% for the same period last year. Drilling down in the LE to gauge the impact of the sovereign debt crisis on loan credits, we found that the LE performed in line with the broader markets. Issuers from the more stressed European countries, namely Greece, Ireland, Italy, Portugal, and Spain, also known as the PIGS, which represent 14% of the index based on the par amount outstanding, posted a second monthly loss in 2012 during the month of April, while constituents from other regions remained virtually flat on a market value basis. Now we turn from the secondary to the primary. This graph details new issue volume for both leveraged loans and high-yield bonds. April's European primary leveraged finance activity was disappointing in its lack of new transactions, with the high-yield bond and leveraged loan markets generating 1.4 billion euros of new volume each. For both asset classes, this is the lowest monthly volume recorded since December 2011. As a result, new issue volume has fallen well behind that of 2011. For high-yield bonds, the year-to-date issuance stood at 13.5 billion euros, 36% lower than the 21 billion euros seen during the same period last year. The lag was even greater for leveraged loans, which has just posted a total volume of 8.4 billion for the first 4 months this year. This is down 48% from last year's tally of 16.2 billion for the same time period. Cross-border traffic, that is, European issuers accessing the U.S. markets or U.S. issuers accessing the European markets, picked up again, though this time for European issuers accessing the U.S. market. For the year through April 30th, European borrowers have raised 18.7 billion of loans and high-yield bonds across the Atlantic, roughly double of last year's comparable and already exceeding the 2011 full-year total of 15.7 billion euros. Issuers not only hope to tap into a more liquid market in the US, but also issuer-friendly documentation and covenant packages, as well as save on interest costs in some cases. The default rate by principal amount moved to 4.7% at the end of April 2012, down from 5.3% at the end of March. Meanwhile, the default rate by issuer count is now down to 4.7% as well at the end of April, down from 5.1% seen at the end of March 2012. However, most market participants expect default rates to rise further during the year. Themes to watch for. As the sovereign debt crisis moves back to the front pages, there'll be increased volatility with periods of risk on and risk off. Issuers and arrangers will have to be opportunistic and organize to launch and price transactions during those periods of risk on. Issuers will continue to tap the U.S. market for both loans and bonds. Issuers will also continue to do bond for loan takeouts, markets permitting. Given the greater liquidity in the high-yield market, some arrangers are a lot more comfortable underwriting senior secured bridge loans to high yield and then flexing and structuring the capital structure based on market demand, rather than underwriting an all-leveraged loan structure. The flow of amendment requests from issuers will continue for both extending their maturities as well as covenant relief. Loan repayments in April spiked to a 6-month high, with early indications suggesting that May could prove yet to be another bumper month for repayments. That brings us to the end of our overview. I hope you found it informative. We'll update the analysis each month and plan to have analysis of other specific European market segments going forward. Check out LCD's YouTube page for other video analysis of the leveraged finance market, including U.S. loan market wrap-ups. The link to the page is in the description for this video. For more information on LCD news or research in Europe, you can contact Anna Cini. You can email her by clicking on the link in the info box. Thanks very much. We'll see you soon.